Candlestick chart, also called Japanese candlestick chart or K-line, is a style of financial chart used to describe price movements of security, derivative, or currency. It is similar to a bar chart in that each candlestick represents all four important pieces of information for that day: open and close in the thick body, high and low in the candle wick. Being densely packed with information, it tends to represent trading patterns over short periods of time, often a few days or a few trading sessions. Candlestick charts are most often used in technical analysis of equity and currency price patterns. They are used by traders to determine the possible price movement based on price patterns. They are visually similar to box plots, though box plots show different information. Candlestick charts are thought to have been developed in the 18th century by Munehisa Homa, a Japanese trader. They were introduced to the Western world by Steve Nissen. His book, The Japanese Candlestick Charting Techniques, first established in 1991. They are often used today in stock analysis along with other analytical tools such as the Fibonacci analysis. And beyond candlesticks, Nissen says, however, based on my research, it is unlikely that Homer used candle charts, as will be seen later when I discuss the evolution of the candle charts. It was more likely that the candle charts were developed in the early plot of the Meiji period in Japan. The area between the open and the close is called the real body. Price excursions above and below the real body are shadows, also called wicks. Illustrate the highest and lowest trade prices of an asset during the time interval represented. The body illustrates the opening and closing trades. The price range is distance between the top of the upper shadow and the bottom of the lower shadow moved during the time frame of the candlestick. The range is calculated by subtracting the low price from the high price. If the asset closed higher than it opened, the body is hollow or unfilled, with the opening price at the bottom of the body and the closing price at the top. If the asset closed lower than it opened, the body is solid or filled, with the opening price at the top and the closing price at the bottom. Thus, the color of the candle represents the price movement relative to the prior period's close, and the fill of the candle represents the price direction of the period in isolation. A red candle represents a price action with a lower closing price than the prior candle's close. A green candle represents a higher closing price than the prior candle's close. In practice, any color can be assigned to rising or falling price candles on your charting platform. A candlestick need not have either a body or a wick. Generally, the longer the body of the candle, the more intense the trading. Candlesticks can also show the current prices they are forming, whether the price moved up or down over the time phrase, and the price range of the asset covered in that time. Rather than using open, high, low, and close values for a given interval, candlesticks can also be constructed using the open, high, low, and close of a specified volume range. In modern charting software, volume can be incorporated into candlestick charts by increasing or decreasing candlesticks width according to the relative volume for a given period of time.